So, hey guys, it's Rick Hale with Empire Builders. I'm excited to have a really, really cool guy on board with us. Bo Parfet is a friend, and his story is amazing. And like most of our stories, it's still in progress. So it's not a done deal. But let me just share a little bit about a little of the technical side of his background. He's the managing principal and head of growth at DLP Capital. But that's obviously where he is today, not where it started. He spearheads the strategic growth opportunities across DLP Capital's family of companies. He's an experienced senior executive with a passion for impact investing. We're going to talk a little bit about what impact investing means and what it is. You graduated, you've got a degree in economics from Colorado State, and then you went on and nailed a master's degree from the University of Michigan, followed by an MBA from Northwestern University's Kellogg School of Management. So you're well schooled, to say the least. You were an investment banker at JP Morgan, New York City, and then and a fellow at the Financial Accounting Standards Board. So you just left the room with my core competency with that statement of accomplishment. 7 years later, you and your wife co-founded Denali Venture Philanthropy to fuse your business experience with a desire to support global positive change. And what a strong statement. Can't wait to hear more about that as well. And then on top of all that, you're an accomplished author. I don't know if you see that. Die trying. Oh, this backdrop's not helping me. Oh, well, it's a great image if I didn't have my fake background. There it is. Die trying with you standing near the top, if not I suppose that's the top, right? Is that image Everest?
That's right.
So you've climbed all 7 of the major summits. I had to write them down, and I'll probably mispronounce one, but it's Mount Willem, Elbrus, Vinson, Kilimanjaro, Denali, Aconcagua. How close am I?
You're close.
And then Everest. Close is good for today. So yeah. I think what I understand in reading the book, that there's only been roughly 100 people to accomplish that feat. Is that about right?
That's at that time. That's about right. More people have done it in the last 10 to 15 years or so.
Yeah, that's an amazing part of the story. And again, we're going to touch on that. You also participate in speaking engagements, domestically, internationally. You're recognized for demonstrating commitment to social change and awarded the Presidential Volunteer Service Award, given to individuals who've completed 4,000 or more volunteer service hours throughout the world. So among all of your accolades, that one's no less important. And I think it's an awesome part of your story yet again. So welcome to the show, Bo. So happy to have you here today, and I feel grateful.
Rick Hale, thanks for having me, my good friend. I'm excited to be here.
Awesome. So let's just fire away with a few questions. And as usual, the whole idea behind Empire Builders, just to remind everybody, is that, when you build an empire, it's not uncommon to look at it one singular lane of life and one accolade that creates, hey, that guy's an empire builder. He's got X amount of assets, or maybe it's some flag in the ground for accomplishment. But what I love about the show, and what I extract, and hopefully it I guess shares, is that there's more energy behind succeeding in one category in life. To have a holistically fulfilling life, it really requires balance and a sense of purpose in all categories. And so, speaking from that, give us a little background. Where does a Bo Parfet start? Like, where did you grow up? Give me a little history. And I know you're a family guy, and so evolve into that too.
Sure, you bet. I think background's important, and happy to share my story. And again, everyone who's listening, they have their story too, and mine's not better or worse. It's just different. But here's my story. So I grew up in Michigan. And we joke and say, well, some people, I work out of Florida now, and they're like, well, what's Michigan like? Well, we have 9 months of winter and 3 months of bad sledding. Okay. So the weather is cold up there, but grew up in Kalamazoo, Michigan. My parents divorced when I was about 8 or 9, again, which is not uncommon in America. And when they remarried. So I'm basically, with combined families, one of 9.
Oh, wow.
So I had a couple challenges growing up, but one of them was dyslexia. Anyone out there has a learning disability or dyslexic, definitely can, we can talk, I feel your pain there. I had a speech impediment, struggled with my R's or S's. My parents divorced. If they listen to this, I love them. They're fabulous. It was tough for them. They did the best they could. But we were one of nine. I was one of nine kids growing up in Michigan, and it was a great place to grow up. Good Midwestern values.
That's cool. So obviously you're well schooled, and somebody instilled the virtue of education in you early on, or you just had it innately. What led you to, the multiple degrees, and, obviously growing up, what was and coattailing that question is, what did you want to be when you grew up, when you were young? Like, did you have this vision early enough or did you just evolve through school to figure it out?
It's a good question. I think as a kid, a fireman, an astronaut, a doctor, an entrepreneur, like I had a million things that I wanted to do. And then in sixth grade, I watched the movie Hoosiers. Any basketball fans out there?
Awesome.
And became absolutely obsessed with basketball. At 14 years old, I kind of had my peak. But I went to University of Michigan. I won the one-on-one competition, the 3-point contest, and got MVP of the camp. I did the same thing at Indiana. I got a letter from Bob Knight, Coach Bob Knight, and Steve Fisher, and I was convinced that I was going to the NBA. So that was kind of my first crystal vision: is, hey, I'm going to, I scored 60 points in a game, and I'm like, man, I'm really good at 14. And then 2 years later, I realized, I'm about average. There's no way I'm going to make the NBA. But that drive to practice on my own really, I think I was born with it. That drive. I think being dyslexic, having the speech impediment, kind of growing up in two different homes, just that adversity, not overnight, Rick, but over time, just this consistent struggle. One of my favorite books is called Mindset by, I've got it right back here I've got it right here, by Carol Dweck. Anyway, good book if anyone wants to check it out. But this growth mindset, I just kept grinding. And I knew I was going to do something and have an impact. I didn't know what, but my first real crystal clear was I was going to shoot for the NBA. How about that, Rick?
All right. So look, we played golf a week ago, in fact, and not to slight your height, but you're not 6'8". So you must have been a shooting guard or something.
I was.
I figured as much. You're shifty. I could see it on the golf course, and a heck of a golfer too, by the way. So let's maybe thumbnail your career trajectory, and then we'll reverse engineer some of the philanthropic. And then, of course, man, I want to hear some stories around 7 summits, man. It blows my mind that you would A, set that as a goal, and B, accomplish that goal, because I mean, a 5K seems daunting to me. And so we'll talk about that too, but go with the career. So I know you're with DLP Capital, and you work with Don Winter, who's a visionary leader and an amazing empire builder in his own right. And he was actually on our show maybe a year and a half ago or so. So if you hadn't seen that, go back and check it out. But tell us how your career path led to that, and what you love about what you do. And basically, what do you do?
Yeah. Good question. I do want to tell one kind of foundational story. I think that's important, that kind of sets somebody for a career in being an entrepreneur or being part of a fast growing business. So when I was in second grade, at a parent teacher conference, my second grade teacher told my parents and me that it's highly likely that Bo doesn't graduate high school.
Wow.
Rick, I'd love to tell you that I heard that. I went home that night and I said, I'm going to prove that teacher wrong. And hey, life's going to be great. That did not happen. I went home and cried my eyes out because I thought something was really wrong with me. And, I had a tutor, thank goodness, Mrs. Allman. Gail Allman was amazing. And I just grinded. And then, for years. So if anyone's listening and you're in a tough spot, I think just consistent work and grinding. And then in seventh grade, a teacher told me, they said, hey, I've got good news. Bo's going to graduate high school, but not college. I was like, man, hey, well, that's progress. It's progress. So it was really rewarding for me to get the 2 master's degrees for a whole host of reasons. But
Wow.
My upbringing, I always liked the struggle. I always liked the growth. And, there's one of my favorite quotes, Rick, is there's the 2 most important moments of your life: the moment you're born, and then the moment you know why. And for me, the why was always to try to have an impact, help people who were struggling in life. They may not have my same struggles. That's okay. Theirs are maybe 10 times worse, but let's have an impact. That's a big why for me. So in order to have an impact, I needed some skills, right? So I worked at FASB, as you mentioned before. I was actually there during 9/11, which was obviously a tragic time. I was there in Manhattan and saw the towers fall with my own eyes.
Oh
and
gosh.
I was at FASB at the same time. And then worked at JP Morgan. So got some good kind of financial skills. And then after my MBA at Northwestern, I always wanted to be a professional mountain climber. And, that itch everyone has. Well, I say, hey, I was a professional mountain climber, Rick, for a year, because a year feels good. It was about 9 months. Living in a tent wasn't as romantic as I thought, for 250 days or what have you. I still love to climb. I know we may get into that later. Still love to climb, just didn't want to do it kind of full time. And then I started my own business. So in 2007, I started my own business. And everyone on the call was like, well, wait a minute. Isn't the big crash coming of 2008, 9, and 10? Like, what?
Oh.
I mean, Bo, you have horrible timing. And, sometimes I do, sometimes I don't. So we started a business in student housing apartments. So off-campus student housing apartments. The parents co-sign on the rent. If you're within 5 blocks of a college campus, at that time, there wasn't a single loan default that our research showed us. So we kind of, big demographic. So we like that. And then, so we did what kind of most entrepreneurs do. We tied up a deal. We also built a model to rank the top 100 universities in the country, but tied up a deal, asked friends and family to chip in what they could. My family said no at the time, but our friends, our old coaches and professors and teammates all chipped in, which was great. I did have some family invest in some deals down later on, which was cool, but that first deal was a critical one. And then we had quite a few deals that we were kind of value add, buying apartment buildings and rehabbing them in college towns. And then we had, trying to remember, Rick, we had about 1,000 units under contract. And then, the 2008 collapse happened, right? So Lehman goes bankrupt. Our equity partner pulled out and said, we're not going to fund the deal. So we had to find another equity partner, and the second worst economic downturn in modern history. I mean, it's amazing. I still have hair on my head. But we made it through, and we ended up buying a lot of apartment communities in 2008, 9, and 10. And it just worked. I liked real estate. I liked that we were providing a safe place for people to live. We kind of did a green rehab. We were close to campus. We were providing a place for kids to feel safe so they could be educated and go impact the world. So I ended up selling that business. We sold that business off in pieces, which is a great story. And then I had a little bit of dry powder, started my own very small, humble family office. And the good news, Rick, is I made a lot of investments. The bad news is I made a lot of investments. So another good saying or teaching out there is it takes a tremendous amount of effort to make a nest egg, but it takes 10 times more effort to keep it. So anyone listening, once you've made it, I mean, it's not done. It's just the real work begins. So definitely had some, good investments and horrible investments. But one of those investments we made was with DLP and Don Wenner. And he's a very, very special human being, as you know, a very talented entrepreneur. Many people call him the next Sam Zell, but without the attitude, or the next Bill Gates. He's a prolific CEO, very humble. And so DLP is doing some great stuff, but I'll hit the pause button there.
Yeah, that was great. No, that gave us a good picture of how you kind of evolved and, from employee to entrepreneur. And so quick question, since we've got a lot of real estate professionals are going to listen to this, and there's a common theme that shows up in these shows, like how do you get started? And clearly it sounds like it was bootstrap, it was beg, borrow, and there was probably no stealing, but you get the saying. And first you're analytical, second it sounds like you built a model for the economics to be able to sell and share. Maybe give us a quick overview. If you were starting over today and you were like, man, I really want to move towards multifamily, other than just writing a check to DLP and coattailing their expertise, which may be the most brilliant thing you do. But if you're doing it yourself in a local market, what would you do?
So I would approach it, kind of analytically first. Is I would say, okay, what states have population growth? So what are the good states, right? So then that narrows down the list. So I kind of start macro and work micro. So what makes a good state? Do they have population growth? What's their cost of living? Are they business friendly or not? Do they have a budget surplus or deficit? What's the tax situation? And I would kind of get a feel for that. And then I would look, and that data is pretty easy to get, by the way. Another thing to look at is birth rates. That's also public information. And then you start to drill down from there and go, okay, now I found a good state. What are the good markets, right? So what are the good markets to be in the state? And then once you find a good market, okay, so what areas of that market are not good? Maybe there's high crime, or, it's not a good area. Okay, so these are the paths of growth. Okay. And then I'd kind of look at, what's the rent growth, or, what's the opportunity there? I think infills always de-risks, right? Because you're not going, hey, I'm going to buy some farmland and in the path of growth. That can work, by the way. Mm-hmm. But I always look, if somebody could buy something that's infill or existing and that has existing cash flow. Some people say cash is king. And you're like, okay, so you're sitting on a lot of cash and inflation is eating away at it. That doesn't real quite make sense. Some people say cash flow is queen, and let's hang out with the queen all the time, right? Right. So when you can make money, 24 hours a day, and while you're sleeping, the risk just goes down so much. So there are a lot of ways to look for assets that, maybe the rents are 10 or 20 or 30% below market. Maybe it needs a big rehab. Maybe the seller has, for some reason, they have a life event and they want to sell. And so it could be a home, it could be a duplex, or it could be 20 units or 100 units. So again, I'm a big fan of apartments, but you can still find good deals in, retail, for example, or, other commercial assets.
Right. I like the cash is queen, because you mitigate a lot of risk. Sean, I think you sound like you've got there's something going on. You can't hear you.
Sounded a little bit like Mickey Mouse, but I think Sean's going to come back in and ask a question.
Sean got really excited, which I'd love to feel free, guys, if you want to jump in. I know Sean opened up a market for his investment group in Macon, Georgia. And I think they were at close to 100 doors, and pretty awesome story. So we'll wait for Sean to regroup with his internet. I think he's in the office, so it's probably, I didn't pay the bill or something.
Do I sound right now?
You sound way more right.
For whatever reason, sometimes the first time I log into Zoom, my microphone thinks I'm Daffy Duck or something like that. So apologies for that. I got a whole bunch of questions from what you just said, Bo, but my first is I'm recognizing, listening to you, that I sometimes go on entrepreneurial spirit and we're just going to make it happen without fully researching things. And I love your approach of how you were narrowing it down from macro. What are 2 or 3 resources? You said this information is easy to find, and I'm going, I have no clue where to find the rent growth or whether a state is business friendly or stuff like that. What are your top 2 or 3 resources you go to?
Great question. Thanks, Sean. Nice to meet you. I always think a good one is states and then individual cities. They have economic development groups or organizations, and their job is to provide you all the data to attract businesses to come to that state or that city. And it's free information. They love giving it out. So that's a big one. United Van Lines, so like the moving company, they produce kind of migration patterns, like where are people moving to. That's a great one. And then, in terms of kind of rent growth, most, you could say smaller, most sizable brokerage firms will produce a kind of a market study of what's happening with, the real estate, right, in their market. And they'll happy to give that away too. So those would be a few resources that I think would be worthwhile.
Awesome. Did you ever build student housing, or were you always just buying student housing?
So the answer is yes, we would build, but we primarily would buy underperforming assets, but we would go and get more density added, and we'd build 10 more units or 40 more units onto an existing, place that already had 100 to 400 units kind of thing. So the risk was pretty low.
Gotcha. Last question, and I'll let you get back, Rick. Sorry. So it sounds like you built a fairly nice asset and performing portfolio. What made you decide to sell it?
So when we didn't have much money when we were starting off, and to entice investors to come, we had a preferred return. So some people that are going to listen to this know what that means. Others don't. Well, let's talk about it. So the investors were going to put up 90% or 95% of the capital. And for that, they're taking, 90 or 95% of the risk. So what do they get for that? Well, they get a preferred return. So, in those days, that preferred return was 10% or 12%. So the first 10, let's just pick 10, the first 10% of profits, that first 10% is going to go to the investor. Well, they like that. Their risk goes down a little bit. They know that they're first. And then above the 10%, you could then get into something called a split or a profit share. And then in that case, it's typical to do an 80-20. So every dollar above a 10% preferred return, 80% would go to the investor and 20% would go to the real estate operator. Does that answer your question, Sean?
You're on mute. Mute, sir.
So it sounds like you were giving a good bit of the profits, so you were working hard to get to the people who gave you the money at the beginning, and that made you decide to cash out, or was there appreciation?
Yes, thank you. So the IRR calculation, the longer that you hold the asset, the IRR gets harder, kind of gets harder and harder to maintain because the time part of the calculation. So once we did the rehab, and created the value, we're pretty incentivized to sell, because that's where we can start to share in that 20%. And that's, so owning them long term didn't bode well. Now, one thing we should have done is after we had built a good sized company, we should have said, okay, now who are the investors that want to hold this for 10 or 20 years? We can recapitalize it or sell it to the new group, right? The returns won't be as high, but they'll be more consistent. And then we could have owned these assets for much longer. We did not, we were growing a business and didn't think about it, so we were definitely short-sighted, Sean. We learned from that, but looking back, we could have done that. We probably should have. So that was definitely an oversight on our part.
Yeah, but at the time it made sense, and that's how decision-making works. And the fact that you were paying 10+%, that's in today's world, that's pretty uncommon, unless it's, far riskier. And so I think folks in your chair today probably look at it a little differently from a, net operating income position versus long-term IRR.
Agreed. And that was, 2008, 9, 10. I mean, it was a pretty tough economy.
That's a good
The
point.
10 or 12 was needed. I think, today's market may be a 6, a 5 to 8% pref. So yeah, good.
Yeah. I mean, with the benefits of cost segregation and some other tax advantages, it still nets out a great return. So buying into syndications is not a bad idea. And it's, low stress and low work. I mean, but you don't get that big pop at the end funded by other people's investments, but you also don't do the work. So let's evolve the conversation into where you are today and what your current role is and how you
Sure.
parlayed that experience and expertise into adding value at DLP.
So I started a business, as we heard before. Okay. Had a successful exit, and then started kind of a family office entity where we made investments, and some did well and some did not go well. And then we made an investment with DLP, and I met Don Wenner. So my wife had always said to me, like, I know that you're going, you have too much energy, you have too much passion, you're gonna join something. I'm like, well, I'm just waiting for the right thing. So when I first met Don, I knew that he was destined for greatness. And so that is a great story. But to answer your question, Rick, what do I do now for DLP? Okay. So I've been promoted, which is great, right? To be acknowledged for the hard work you're doing and the value you add is great.
Mm-hmm.
So kind of spearheading growth. There's a whole host of things that I get to work on, which is pretty exciting. So large acquisitions is one area. So this could be, trying to buy a public company or a private company and fold them in, either take them private or fold them into DLP. It's always worth looking at big, large acquisitions that may be being mismanaged. So it's always nice to have a worm in the water for that one. A second one is just regular real estate portfolios. Mm-hmm. So, apartments that are for sale. Ideally, their portfolios, they're larger, right? So real growth kind of opportunities, land deals, and then hiring and recruiting leaders is another area I focus on. So when there's a talented person at a company and they're doing really well, they're probably happy. So to convincing them to go, no, you'd be happier with us, which we believe takes a lot of time. So I spend a lot of time on kind of hiring and recruiting leaders. Another area would be capital formation. So working with other family offices or RI wealth management firms or institutions or RIAs that want to allocate capital to DLP. So kind of, working on that. Speaking. So do a lot of speaking on behalf of DLP. So if Don or another senior leader doesn't want to make a speech, it seems like that, hey, Bo will go do it. And Don has a podcast and I'm a co-host there. So that's a lot of fun for me. And then we have a lot of events and I MC. I never thought I would be an MC, but I guess I'm an MC for a lot of our events. So those are some of the things that I get to work on and have a lot of fun with.
That's awesome. And Don, if you guys caught the interview that I had with him, he's also written a book, Building an Elite Organization, which is a great book on how to, and obviously the fact that there it is.
Here it is.
You're a part of it, and he attracted talent of your caliber. You're capable. It's one of those things. You don't need Don. You want Don, and you want that because the law of the lid exists. John Maxwell, taught that you're only as good as your leaders' capacity to grow and go. And give us a thumbnail of what does the portfolio look like today at your company? Like it's pretty impressive to say the least. And then maybe even share with us how investors can invest or what that might look like.
Sure. So what attracted me to one of the many reasons what attracted me to DLP. So DLP is trying to solve, we're an impact company. So we're trying to solve 4 crises in America. Number one is, the workforce housing crisis. Number 2 is the job crisis. Number 3 is the generational wealth crisis or family legacy crisis. And number 4 is the happiness crisis. So everything we do is centered around trying to solve one or all those things. And what DLP, we have about a little bit over $3 billion of assets under management. And we have about
3 billion.
3
Just
billion.
making sure people heard that. Yeah,
Okay.
It's a good figure.
Good figure. We have more than 2,100 families that invest with us. So more than 2,100, and we add out of 20 to 30 or 40 new families a month of new investors, which is great. So at a high level, we kind of do how we execute our business is on the debt and on the equity side. So on DLP, on the debt side, is we're a private lender, so like a private bank, and we make loans to over 250 real estate operators that have that same growth mindset that we have, and that are also trying to solve that workforce housing crisis. So we're a lender, in a typical debt, the debt kind of a debt fund. The returns there have been pretty good, double digit for 7+ years, I believe, maybe 8. So, and it's a pretty liquid strategy, which is kind of neat. So there's 90-day liquidity, as preferred return. The other side is the equity fund, the equity funds. So that is where DLP is basically joint venturing with a current real estate operator, and we provide 80 to 98% of the equity involved in a project. And we do ground up apartments, by value add apartments. We do RV parks, mobile home parks, single family home, ground up rental communities. So we're in a lot of different kind of niches, if you will. And that what's neat about that, I think one of the questions you and I always talk about, Rick, is taxes. So that's a kind of a cool fund because we try really hard to have the growth there be tax deferred growth, right? So you can 1031 exchange inside the fund. With real estate, you can front load the depreciation, and that one has annual liquidity, and that's been doing pretty well too. So thanks.
That's awesome. So yeah, well, fascinating. And I don't know how old Don is, but I think he's significantly younger than me. I don't know if you could even say it aloud, but it's just
he's 37.
He's 37.
Yeah.
That's mind-boggling. So it's never too late and it's never too early. Why would someone invest with DLP versus other syndications or opportunities? What makes yours? And by the way, part of that answer, I can already, spoiler alert, is that you've got a mission statement and your purpose. You have the 4, legs of the stool that make for a stable experience and a mission that people can buy into. Any other thing you'd share about that in terms of like, if you were going to go out and raise funds and create your company and replicate some of this, what might it look like and how would you compete?
So yes, Rick, I think not all people, but many people like, hey, I want to invest in something that's trying to solve, also do good, right? So that's an impact organization. How can I solve a problem and make a little bit of money at the same time? So impact investing. Some people call it conscious capital. So it's definitely, I think that's a piece of it. Another piece is some people just like more risk, right? Like, so they do angel investing or venture capital investing. So for those listening, that's high risk stuff. I mean, a lot of the venture capital risk, they don't have revenue yet. It's just an idea or a technology. And so be mindful of that. So I think cash flow investing or real estate investing is generally less risky. So I'd look for, is there a strong leader? Are they trying to solve a problem? One of the things that we get asked a lot is people get shown a lot of deals. This is a good point here. So do I invest in a fund or do I invest in kind of syndications, deal by deal? So I've invested, in a fund, you're diversified, right? I mean, we get that. But if I've also, name a mistake, okay, out there, I probably have done it. But I've also invested in syndications where I've had that deal go south. And if that deal were in a fund, it'd be just one one of the 50
One of
deals
10
in
or
there,
20,
right?
yeah, or 50, right?
So there is more risk going, syndication. And then there's also a risk of, this is a really kind of a pro tip, I think. So if somebody invests in a syndication, okay, so say they're in deal number 4, okay, great. And then and your deal's doing really, really well. And then they, in deal 6, that deal 6, they're struggling. I'm just giving a hypothetical example. But they have huge investors in deal 6. And these investors are ready to write check after check after check. Well, they will, and this actually happened to me once, but I went in and said, hey, where's that star leasing agent that we had? Oh, we moved her over to this other apartment community, right? So then our occupancy goes down, theirs goes up. So with syndications, you have different investor bases, different, call it masters, if you will, or different partners. And it's really difficult for an operator, I think, to manage that. So my bias is, maybe it's right, maybe it's wrong, or more towards funds for those types of reasons. And you can also have audits, which is great. It's much harder to audit individual deals. If they have 20 different deals, how do they audit? How does a third party auditor come in and audit that? So a lot of operators don't do that. So Rick, does that answer some of your
Great
question?
pro tip. Yeah, because I mean, again, not everybody's going to go build their own individual portfolio, raise funds and manage those. And so as I get older, I realize, I want to own things I can control and put my thumb on that are local. But I think diversifying that approach through either syndications or funds is a brilliant way to magnify a return, especially in, when you look at your stock market. I mean, I think when you hedge in real estate, the odds of losing a lot and the upside potential and the long-term gains are pretty undeniable. I mean, the sector in itself, more money's made in real estate than any other sector, in my opinion.
I agree. And so Rick, right back at you, when you thought about kind of starting your business, okay, you probably had a lot of different options and opportunities. How did you go about thinking, hey, I want to start this business, I want to kind of limit my risk? How did you think about it?
Well, for me, it was, when you say start a business, I tried a few businesses here and there. I had it was called consumer direct marketing, where we were door to door selling, we were a third party subcontract sales force. And the problem was I didn't have the skill set, honestly, to manage it. I could run small teams, but not big teams. And what I learned early on is that my attention to detail was so challenged that it's very likely that I would miss some key element where I should have taken a right turn. We took a left or didn't turn at all and drove off a cliff. So for me, it was first I went into real estate because I knew my skill set, my passion, my energy for serving and helping people would be well, honored, and I could give back more than I took. And so that's a gift in our industry, the joy of buying your first home, or, moving into your dream home, or, again, helping investors create wealth. That's an exciting path to be on. And then along the way, the franchise opportunity at Keller Williams presented itself through a relationship with with Sean Rawls in my office. It was a prior company, of course. And from there, I realized, the back to that, what's the foundation of why you do what you do? It was God, family, and business. It was make a difference. It was education forward. We had the best educational platform on the planet. And I remember back in the day, our common theme or story was, we're going to change the way people see and do real estate in America forever. And it's not only just between clients and agents, but also between agents, and how we co-op and how we come from contribution and not looking to cut corners to win a deal or to necessarily come out on top. Our mantra is also win-win or no deal. And so there were little things were big things when you stack them, and it was the fuel to persevere. And they also had a model that kind of guardrails, when you go bowling, it's, you could have an off day and gutter ball a bunch of times. And, but this company was like the bump, the jump up lanes that the kids get to bowl with. It's almost impossible to gutter. As long as you throw the ball in the right direction, it's going to ricochet into the pins. And that's kind of what I experienced with our company. And what's beautiful about models and systems, and in this scenario, my story here, the franchise company, Keller Williams. So I don't know if that's the exact answer you were looking for, but I wanted,
Sure.
and inherent to that model were role models who are also, because our culture says you share everything and you give back, and we're open books, and we're an open, I could call anyone, in any state in America in our company and ask, hey, what's your secret sauce? How did you accomplish that? And I would be stunned if they didn't not only take your call, but super serve you and giving the information that you requested. And it's been proven time and again. And so, this collaborative community component is unrivaled and uncommon too. So
I love that. I love that, Rick. And then when the downturn happened, 2008, 9, and 10, how did you navigate that?
So great question. And the good news for us is that we were built in a down market in the early 80s in Texas. So we were kind of engineered with a shared commission strategy with low liability to the agent, low monthly fees. So in a down market, we only win when you win. So the goal, education becomes a more important component too. People really want to, supersize their approach to winning with a razor sharp, attack. When markets are good, it's that whole all boats rise and everyone does well. And when it doesn't, people start to, look around for what am I missing and what do I have to do to win? So that was a big piece of it. The other thing I did personally is, you have to always keep your eye on the ball for the market of the moment. And I want to flip the question back to you in a minute about what do you see as the market of the moment, not today, but in the, the not too distant moment. And for me, it was migrating my team into assets from Fannie Mae, Freddie Mac, foreclosures and REOs. And we did really well. And, what I would advise anyone on this call is, winning, and you said a great thing, like it's harder to keep, your nest egg than it is necessarily to earn it, because you can climb the mountain, but then you gotta hold it close. And so, with market shifting and dynamics changing, what's the market of the moment, and for me back then in 08, 9, and 10, it was migrating into REO. The only regret is that the only regret is I wasn't capitalized to in the acquisition mindset. I was more, focused on the brokerage than my own personal portfolio. And, the gift in a shifting market is things go on sale and there's opportunity if you have resources. So 2 questions. Really one.
Rick, before you ask that, I have the benefit of the audience I want them to hear this. So Rick, your leadership is strong, steady, stable, right? Everyone that knows you or that works with you, you're just so smooth under pressure. You're just very clear and calm. And not only do you do that in business, but he also, ladies and gentlemen, people listening, he also does it on the mountain. So Rick and I have snowboarded together, and no matter what the terrain was, you were just so smooth. Your style and your form, it never changed, whether it was icy, steep, not steep, snowy. So I'm going to start thinking about that. You can tell a lot about a person on just how smooth they are, right, in difficult terrain. So kudos to you.
Well, thank you. That's thoughtful of you to say. So and I tell you, there is something to be said for sticking to what works, but I'm sure there's also subtle modifications to environmental shifts. Where does DLP see things going in the next 6 months or a year? And what do this inflation conversation and interest rate increases, and where do you land? And is there a concern for defaults potentially with some of the borrowers that are, maybe miscalculated? Because people have been buying assets now on really low margin, and low cap rates, just, because again, everything's been appreciating and there's abundant capital to deploy.
I do. It's a good question. At DLP, Don likes to say this quote, and it says something like this: it's everyone has the will to succeed, but very few people have the will to prepare to succeed. And, we're just constantly thinking about, when, not if, when the next downturn comes, how are we protected? I mean, it's almost in every daily conversation. So a couple things on that. I remember when I was operating real estate business back 2008, 9, 10, and 11. And the economy, it didn't all go down at the exact same time, and it didn't all come back at the same time either. Some states really took a long time. Some markets popped pretty quick. So I think number one, to go back to, that cliche, but it's true, location, location, location. So DLP is in the South, we say the Southeast plus Texas primarily. And there's just those are big demographics. To go back to Sean's question, we want all the tailwinds we can have at our back. So I think COVID accelerated the migration of people going, hey, nothing wrong with New Jersey and New York,
live anywhere,
but they are expensive. They're expensive. I can move and have a higher quality of life and frankly, get a raise. If I'm retired and I just move, I can get a raise because, cost of living and the taxes. So, if we do have another downturn, we still believe that if you're in the right markets that have good demographics, you're protected. That'd be number one. Number two, cool thing about, being in kind of call it the rental world, right? Where the rents can, is a good inflation hedge. You can adjust the rents, right, as needed. Now at DLP, we do not want the rents to go high. We want to keep them at 30% of AMI or lower. So, our mission is to keep them affordable. But could we increase them a little bit, right, as inflation goes up? Absolutely. So that's protection. And, I think inflation is tough. So we have a community at DLP of a lot of real estate operators. We have this elite membership. So people that have a growth mindset that want to 10x their business in 5 years or less, they become part of our elite membership. And they get to learn Don's book, which about, Rick, the elite execution system. And yes, they can get debt or equity. That's kind of the easy part, but how do you scale your business is the hard part. So having an operating system, I think, and you touched on this too, Rick, with Keller Williams, like having a good operating system, I think protects in a downturn. But our real estate community, it's amazing. Everyone talks, my lumber costs went up 400%. Well, somebody else in our community will go, no, I have a group over here that's not, the price isn't as high. So we'll, as a group, go over and, commandeer a lot of real estate or a lot of like wood, for example, at a much lower price because the buying power of our group. So things like that help. So those would be some of the answers to your question, which we could probably talk for hours and hours about. But yeah,
well, and to your point, it's in your conversation daily. You're not running around with blinders on thinking that the current environment's the permanent environment, because it never is. And those that kind of shift and with efficiency usually win. And those that also have resources, credibility, and cash flow or financial backing also win, because again, it's the whole Warren Buffett, buy when everyone's selling. And I don't know if you've watched the stock market like most people, I'm sure you have. There's a lot of selling going on. And so then the question becomes, when do you buy back in? And to your point, just like in the stock market, there's certain value stocks and certain staples where, their values is really benchmarked against, revenue and profit, and not just some hypothetical hopeful, which is common in the tech world and other genres. So what's the safe play in the market? Those are things to consider. And I hope people listening, take that to heart. And, what is it in carpentry? You measure twice, cut once. So this is the time to probably measure twice and cut once, especially if it's an investment in a consumable or non-appreciating asset or something slightly, off center for what's a near guaranteed win.
Agreed. We still see there's a lot of real estate. And we all know there's tons of apartment communities out there. There's, single family homes for rent. There's just a lot of real estate out there. And we still see people that are operating them inefficiently. And, maybe they've been operating that for 30 years and they're just tired of it. And, they keep the rents 20% below market because they don't want to do a big rehab and, a $3 or $4 or $5 million rehab, because that takes a lot of work and there's risk in it. So, or maybe they want to retire, or maybe they inherited it from their parents, and they just want to retire, and that's okay. It's okay. So there's still, they may think they're selling at a 4 cap or a 5 cap, but we know that, it's really not. It's more like a 6, 7, or 8. We're able to build still, depending on the kind of the asset class, but we're still able to build, call it a 7, 8, or 9 cap. Some of our RV parks, you can build at much higher cap rates. So, and there's still a good margin or a good spread there. So that's also part of the equation.
That's cool and great wisdom. And man, RV parks are a real thing. There's one just south of, I'm on Marco Island part of the year, and there's one in, I can't remember the name of the exact little, it's about 30 minutes south. I mean, it's gated. It's like the most luxury. You roll by, I've gone by it by boat, and you can't get in by car because I don't have a gate access code, but there are some legitimate players in their $500,000 RVs. And I can't imagine it's just kind of like renting space in a, what are those, I had a friend do this where he brought in antique dealers, and he would literally rent 12 by 12 spaces for $400 or $500 a month. And he just had to put someone at the front to track sales. And I remember thinking, man, that's the smartest real estate play on the planet. You get 100 tenants inside of one open building. There's no, utilities, no pipes busting. There's no, calls late night because something happened in the apartment. But RVs are kind of like that, right? There's not a lot of risk.
It's true. And we just did a pretty cool RV park in Jacksonville with a partner of ours. And, it's this growing niche. And I think, I've been to RV parks. If anyone listening, if you've been to one, they're, the bathrooms maybe aren't so nice, maybe there can be a little smelly. There's community showers, right? So you're showering with people that you don't quite know. They've really figured out this pretty cool new model. And I think we're going to see this, call it a new model or a new asset class emerge. And to your point, Rick, I mean, they have lazy rivers, big pools, laser tag. You can rent golf carts. They have mini golf. They have pickleball courts and tennis courts. And you can just go in there with your RV, and you can stay for a day. You can stay for 3 months, and it's your stuff, right? So it's not like a hotel, right? You're not VRBOing somebody else's place. It's your stuff. You have your RV, and the community is pretty cool, and you can go to the next one. You can go to the next one. So it's pretty economical for a lot of people too. Big demographic likes that. So,
yeah,
we're pretty bullish on that segment at the moment.
Yeah. Lifestyle and amenities, man. That's what people want. And then versatility on top of that. If you're not happy, turn on your car and drive.
Yeah.
You're not like, so look, man, we're down to I hope you can go a few minutes over, because I've been lost in the conversation, to be honest, and thoroughly enjoying your story and some ideas around winning economically and purposeful, building a business around purposeful, authentic impact. And so, but let's talk about your book and a little bit about your climbing. I would say obsession. Is that fair? Or at least at one point. But before you even answer that, there's a quote I pulled out of it that I love. It says, what the hell am I doing? I hate this. This is so stupid. And I think it was it embodied inside of that quote was that you have that thought almost, if not daily, sometimes hourly, while in the middle of an adventure. And when I don't know that, I can't really wrap my head around what it would take to climb Everest. And I know that, from spending time with you, there's actually been, horrific, catastrophic experiences with other groups nearby and death. I mean, this isn't just, let's go for a friendly walk. This is, sometimes life and death. So, where did the obsession start? And then how would you prepare? And then give us a kind of that timeline for the evolution of that 7-peak amazing accomplishment.
Sure. Good question. So I'm sure a lot of people on this call, right, you have your passion. So maybe it's fishing or scuba diving or, or hiking or traveling. So all that is a really good stuff. So one of my passions is mountaineering. And you're right, Rick. I was obsessed for many years about it. And I would, I was obsessed, and I had to learn to, like move from obsession to passion, which was a big move for me. But I was lucky enough where when I was growing up, my dad took us out west to go skiing twice. I think we went to Colorado and Montana. When I saw the mountains for the first time, it wasn't in the first couple seconds, but Rick, it was in the first 30 seconds that I was totally hooked because I didn't know, coming from Michigan, I didn't know that the world could be so beautiful and have these mountains,
Majestic.
So go ahead.
It's majestic. I mean, I get it. Atop of the mountain, to me, it's like I'm closer to God than any other place on the planet, and you can just feel that spiritual energy.
Absolutely. Mountains are my cathedral, right? And many other people say that. They're my church. They're where I go to reflect. Absolutely. So, I think this is a good story. So when I was working at JP Morgan, and I was working, most people probably heard the stories. You work 80, 90, 100 hours a week. I worked 7 months in a row. And that doesn't mean Monday through Friday. That means every single day. I don't think I left the office before 11 p.m. for 7 months. And at that point, other analysts were starting to take vacation. But you'd book a vacation and then they would say, oh, no, we got a deal. There's an IPO or a debt deal or a secondary offering. You got to stay. So I went and talked to one of my mentors at JP Morgan. And I said, hey, I want to go climb Kilimanjaro. It's the tallest mountain in Africa. It's been on my list for a long time. And I was about 50 pounds overweight. So if anyone's listening and you're out of shape or overweight, I was really overweight. And this person looked at me and he looked down at my belly, and he looked up at me and he goes, well, there's no way you're going to make it. I go, well, what do you mean? How could you say that? And instead of him kind of telling me, hey, you're pretty chubby guy, he said, well, listen, he said, if you're going to go do Kilimanjaro, and you really can't train that much for it because you're working so much. But if you're going to do anything in life, and if you do it for somebody else, if you do it for something bigger than yourself, then you're going to have more energy than you could possibly imagine. And he said, so who are you going to benefit when you go to Kilimanjaro? And it clicked instantly for me. So we set up a little fundraising campaign, and we raised money, and we put 2 doctors through medical school in Africa that came from these shanty towns. So there's 2 doctors out there right now. I'm still good friends with them, and they've saved over 10,000 lives, all because of this. And then when you do, it's true. Then when you go and climb Kilimanjaro, it's not about you. It's about the impact that you're going to have for the world or somebody else. So, and it's when you give. I want to share this story, and maybe this is one of the most powerful stories I could say. And you can Google this too. So it's the story and the research is a bit macabre, Rick. Right. The story about a mouse. A researcher took a mouse and put it in a bowl of water. He said, how long will this mouse swim before it drowns? Any guesses, Rick, how long a mouse would swim before it drowned?
An hour? I don't know. That's a great question.
That's what I guessed. An hour. About 2 or 3 minutes.
Oh, wow.
And then this mouse drowned. So they did this a few times, and on average, they would swim about 2 or 3 minutes and they would drown. And then the researcher did something fascinating. The researcher said, right seconds before this mouse or mice are about to drown, they take them out and they take them out of the water. They let them rest for a couple of seconds, for a very short period amount of time. And then they put them right back in the water. How long do you think they swam the second time before they were drowned?
Well, if it was minutes before, I would double that number.
Okay. They swam for 60 hours.
Holy cow.
Isn't that amazing? And the reason they would swim for 60 hours is because they had hope and belief that they would be rescued. And Rick, for me, mentors have given me hope and belief that I can be a better person, that I can impact the world. And a lot of these scholarships that we set up did the same thing for these people in Africa and other parts of the world. Is when you give somebody hope and belief, and Rick, you do it every day with the people that you work with, giving somebody hope and belief that they can be better, they can have that growth mindset. It absolutely has an impact, and it's incredible. So I wanted to share that story.
Man, what a beautiful story. I feel like we should end, but I don't want to. If you got a few extra minutes,
sure.
You sure? All right. So, man, I'm stunned that was the result of just simply, and obviously the size brain in a mouse. It's just hope is universal in that sense of potential that, as bad as it gets, there's always an outcome that's, either beneficial or potentially a win, even if you fail forward. So there's some of that buried in there as well. What
another cool research study real quick. I'm reading this book right now. I'm looking for it.
How many books a year do you read, roughly?
Pardon?
How many books a year do you read?
My goal is 1 to 2 books a month.
That's
I do
awesome.
a lot of reading for work, right? A lot of email reading, a lot of research and reports. But I try to read. If I could read 18 to 20 books a year, that's a good goal. There's a book about happiness, and the research. They just did this with one class. It's a really short one, but they got everyone in say it's a 5th grade class, and they had them do a test, right, to test their cognitive ability. And then they told the teacher, they said, these 3 kids are incredibly gifted. Okay. And then this is right at the beginning of the school year. So then at the end of the year, they tested the whole class again. And, these 3 kids tested much higher than they did before. They excelled the whole year. They got great grades. But here's the hook, right? Here's the interesting twist. Those 3 kids, they didn't tell the teacher this. When they did that first initial test, Rick, those 3 kids, they were average.
Yep.
They were average. They scored average. But they told the teacher, they didn't tell the teacher that. They told the teacher, hey, these 3 people, they're really capable. They're really gifted. Okay. And yet at the end of the year, what happened? They did score higher, right? They did have great grades. And it's that hope and belief in people that I think is so powerful.
Right. Well, I think if it's the same study I read about, they also were told that the teacher could not tell the kid that they were special, that they had to keep that a secret, and that it was just something for them to put in the back of their mind as they went through the school year, the traditional curriculum, which makes it even more amazing. It's not like, I'm sure there was positive energy transferred and expectation, but yeah, the power of belief. And, if it's to be, why not me is my favorite. That's my favorite self-actualization, if you will. If it's to be, why not me? And then my next thought is always, and who's doing it that I can emulate or borrow from to get there quicker and more efficiently?
I love it. And how many books are you reading? What's your goal for the year?
It's probably about the same. I try to knock down 1 to 2 a month as well. And I do a lot of side reading, like you said, bits and pieces, but straight up books. I do a lot of audibles too. So if I count that, it's probably more like 25 or 30 easy. So it's funny how we've evolved and how we read and what we do. And the only disappointing piece, by the way, what I used to do, I would read a book with the mindset that I want to teach someone that book later, if it was an educational or inspirational book. And then I would always, in the back, there's always a couple blank pages, and I would reference pages so that when I go back to it, I don't have to reread the book. I just go through to, the top 20 things I pulled from it, the quote or the statement. And thanks for reminding me. I need to spend more time physical reading, because I think there's a different experience that goes with it. It's just not as efficient. So, philanthropy. Tell me a little bit more about where you are. And I know you've got a family office, and you've got some attached goals. Can you share a little bit about how you've parlayed your success into a mission statement and executables?
Sure. So hopefully there's 1 or 2 good nuggets for folks to take away here. So my wife and I and 2 kids, we have a goal to bring 1 million people from working poverty to middle class or higher. 1 million. And
Wow.
The entity that we do it through is Denali Venture Philanthropy. Okay. And if anyone is interested, you could go to denaliventurephilanthropy.com and check it out. Again, just our family. And we right now at 150,000 people we've helped take from working poverty to middle class or higher. Okay. So that's one of our big goals.
Can you say it again? I'll type it into the chat. Denali Venture.
DenaliVenturePhilanthropy.com.
All right. Thank you.
And actually, you know what? We actually just redid website. So I think it's actually denalyimpact.com.
All right.
That's the new website. Want me to put it in, or you have it?
Impact. Say it again. Denali Impact.
DenaliImpact.com.
Beautiful. We got it. It's in there multiple times.
Okay.
Awesome. Thank
Perfect.
you.
The other one, for what it's worth, is the old website. So please go to the new one. So a couple ways that, if you're, hey, how do I do it? So there's a great saying that says the furthest distance in the universe is the distance between your head and your heart.
Wow.
And when you hear about a nonprofit or an impact organization, when you hear their story, your heart says, oh my gosh, I want to write a check right away. This is amazing. And then your head gets in the way and goes, well, wait a minute. How efficient are they with the capital? Are they actually having an impact? And, do they have a 5-10 year plan? Will they even be around?
Right.
All good questions. So what's kind of cool is this impact investing or conscious capitalism, or venture philanthropy. It kind of has a lot of different names, but generally means the same thing. It kind of merges that distance between your head and your heart. And one cool thing to do, everybody, is Kiva. So if people look in, and hopefully someone on the phone here can put this into the chat box. So Kiva Loans, okay?
Spell it.
Kiva. So if you just Google Kiva Loans.
Okay.
Okay. Kiva, sorry, VA. V as in Victor.
Oh, Kiva. Sorry.
Yeah, Kiva.
I was at Def Leppard and Motley Crue last night. I'm probably a little hearing deficient.
Okay, that's okay. So you can do a loan, once a month, my wife and our two boys get together and they have a great platform, and you can make a $50 loan to someone. They need more than $50, but some only need, say, 300 or 1,000, and you can be a part of that loan. And it's a global platform, and you can help someone get something that they need, because most of the world, they don't have capital markets like we do in the US. And you can see who they are and kind of read a little bit about them and what they need that loan for. And then you can be part of it. And then when they pay back the loan, and then you can redeploy it and help somebody else. So this Kiva program is very simple. You can do it in 5 minutes, and you can do it in an hour, just depending on how much time you have with your kids. So definitely check that out for those that are interested.
Cool. Well, I think we've kind of run our course here with time. I could go for days, I think, with you. The conversation's always invigorating, and I appreciate it. Here's a few recap thoughts I had just from today. One is there's lots of resources to make sure that your investment is in the proper demographic and geographic zones. United Van Lines, you named a few resources, including local governmental releases, press releases, and documentation, because they're trying to attract business. So be strategic and recognize that in a shifting market, location is still the number one variable that you need to take a look at. On the the success side, I love that you said you're a grinder, man. I think grinders win. It's time on task over time. And I also know that, if we had more time, I would ask you, questions about how you prepare to climb Mount Everest. And I can only imagine that it's a year or more, or, and then there's the base camp but how you manage the small things is how you manage all things came to mind. So how you manage the small, and it's all about successive steps, and it's about progress and not perfection, which you pointed out. And I think that's important to remember, and that, failure is one step closer if you properly analyze and course correct, if you will. Failure is only failure if it's debilitating and it doesn't lead to something bigger and better, or maybe a perspective that gives you more empowerment. And the last one is, if you're building a team or an organization, make sure that it's purpose built. The two most important days are when you realize why you were born, the two most important days of your life are being born, and then recognizing why you exist and why you're born. So I may not have said that exactly right, but man, what a fabulous hour and 10 minutes of lessons and wisdom. So what a gift you've given us, Bo. I really appreciate you with all my heart, and I look forward to reciprocating soon.
For sure. And thank you for having me. Thank you for hosting. And we are going to reciprocate. Please tell the audience do you have something coming out here? Because we're gonna have you on our podcast.
Yeah, I've written a book as well, Stop Settling, your guide to an amazing and regret-free life. So it's, yeah. And funny enough, Bo, buried inside of it is a little snippet about that whole mindset of success and the story about the kids who are, average, but profess to be accelerated. And so it's a cool reference and interesting that you picked that one. But I'm excited. Yeah, it'll be out in the next 60 days if things go well. Probably physical copies in 90 to 120. Things are go ahead and the supply chain narrative lives on.
Well, we can't wait to have you as a guest on our podcast and sell a bunch of books, because these books will have a positive impact on the world. So great job.
Well, thank you for the compliment. It's amazing what you can do in a collaborative environment, and friends like you certainly make my life better. So grateful for you. Have an amazing day. And thanks for all that watched. I hope you got something from it. Sure you did, Bo. Thanks, Bo.
Thanks, Rick. Grateful for you. Thanks, bud.
All right, brother.
Bye-bye.
Bye-bye.